Hi, I'll be your tutor on economics today, and today we'll be learning on the markets. Actually, we'll just be having a basic introduction of what the market is all about. We'll be defining the market and we'll be observing what are the types of markets that we have. Some might say a market is a place where people buy and sell commodities, but can't we have a market where commodities are not sold? Can't we have a market where we don't buy? Can't we have a market where it's just more than buying and selling? Today we'll be observing that. Okay, what then could be a market if it is not only a place where commodities are bought and sold? My simple definition for a market would be a market can be an arrangement, or it is referred to as any arrangement between a buyer and a seller to exchange something of value for another which is also of value. I take myself again. A market is any arrangement, be it physical or beyond the physical, between a buyer and a seller to exchange something of commodity and another value or another object which also has its own value. So I'll write my definition on the board. Okay, if you can see my definition on the board, I have a market is any arrangement between a buyer and a seller to exchange an object of value for another object of value. That's why we said a market can not only be an arrangement between where goods and commodities are bought and sold. We have certain objects that are bought and sold, which is even farther than a good and also a commodity. E.g., we sell our currencies. Our currency is not a good, neither is it a commodity, but we sell and buy commodities, our currencies also. Before we go further, I would highlight or would observe what are the types of markets. The types of markets. Number one, we have types of markets according to commodities sold in them. We have types of markets according to chains of distribution. And also, we have type of markets according to the level of prices. These are the three basic types of markets that we have, and in these three types of markets we'll be seeing also other examples of markets that we have. For example, types of markets according to commodities sold in them. We have the money markets, we have the capital markets, we have the foreign exchange markets, we have the commodity goods market, we have the consumer goods market. We all have plenty types of commodities that we sell in the type of market which is related to according to the commodities sold in them. Types of markets according to the chains of distribution. We have basic just two, which is the wholesale market and the retail market. Then thirdly, we have the types of market according to prices or pricing. We also have two, which are basically the perfect market and the imperfect market. If I would highlight the types of markets according to the commodities sold in them. You know, we said we have the money market, we have the capital market, we have the foreign exchange market, we have consumable goods market, okay, let's define these three. For the money market, a money market is a market where short-term loans are bought and sold. A place where we have short-term loans given to market sellers or market buyers, where they can buy loans. Can you see that not only goods can be bought, we can also buy loans. And in a market where loans are bought and sold, short-term loans, where they are bought and sold, is what we call the money market. In the money market, short-term loans are gotten, short-term loans are sold, short-term loans are bought. In the capital market is just like the money market, but a little bit different. You know, in the money market, short-term loans are sold, while in the capital market, long-term loans are bought and sold. That's just the only difference between them. In the money market, short-term loans are bought and sold, but in the capital market, long-term loans are bought and sold. Sorry, pardon me, please. Long-term loans are bought and sold. So whenever we see a capital market, we should be able to tell that this is a market where long-term loans are bought and where they are sold. How about the foreign exchange market? I know the word foreign exchange market is not a new name. Some of us might have been listening or hearing about forex or foreign trading, wherever it is. The foreign exchange market is a market where we buy and trade currencies. A foreign exchange market is a market where currencies of various countries, where currencies of various economies are bought and sold. So that is the definition for a foreign exchange market. It's a market where currencies are bought and sold. Where currencies are bought and sold. So for consumable goods markets, I need not to define too much. A consumable good, you know what that means now. Goods that are purchased for quick consumption. So that is the market where we buy goods that we are buying or goods that we are needing for quick consumption. Examples of the consumable goods are the food we eat, the water we drink, and etc. So we've defined the money market, the capital market, the foreign exchange market, the consumable goods market. We can still tell that there are some other examples, but we just highlighted the major markets that we have according to commodities sold in them. So don't forget that the consumable goods market is a market where consumable goods are bought and sold. To recap, the money market is a market where short-term loans are bought and sold. The capital market is a market where long-term loans are bought and sold. The foreign exchange market is a market where currencies are bought and sold. The consumable goods market are markets where consumable goods, which are which are goods meant for fast consumption, are bought and sold. Now we'll be looking at types of markets according according to the chain or channel of distribution. Types of market according to the channel of distribution. According to channel of distribution. You know, we said that there are two major markets in this type of market, which includes the wholesale market and the retail market. Many a times, some students do confuse what this word is. So not to give a very good explanation, an wholesale market is a market that buys directly from the producer in large quantities and sell directly to the retail or the retailer in smaller quantities. I'll take my definition again. An wholesale market is a market that buys from the producer or manufacturer in large quantities. Don't forget that part, or bulk, in large quantities, that buys directly from the producer in large quantities and sells to the retailers in smaller quantities. So all that the wholesale marketer or the wholesale market is involved in is buying the largely produced goods from the company and bringing it to their warehouse, in turn to selling to the retailers in smaller quantities or in bits. We can easily tell that the wholesale marketers are big men or big women that are involved or that has enough income to buy a large number of commodities from the producer and to now sell in smaller quantities to the retailers. Now, what is the retail market? The retail market is a market that now buys in smaller quantities from the wholesalers or from the wholesale market and sells in bits or units to the final consumers. I take my definition again. The retail market is a market that buys in smaller quantities from the producer and sells in bits or units to the final consumer. I write on the board. It's a market that buys in smaller quantities from the wholesale market and sells in bits to the final consumers. So we've looked at the type of market according to the channel of distribution. We could see two markets, which are the wholesale market and the retail market. We'll be observing lastly the type of market according to prices or pricing. Herein we also have two markets, majorly the perfect market and the imperfect market. Remember, we said this is just an introduction to what the market is all about. So, a perfect market. This is a market. A perfect market. This is a market where buyers or sellers in this market have general knowledge of goods and services or of commodities. They have a general knowledge of the goods and services sold in this market. Buyers, sellers in this market are basically known as the price takers. in the perfect market, the buyers and the sellers have general knowledge of the level of pricing in this commodity. Remember, we said this is a type of market according to prices. In the market wherein we have the general knowledge, both the buyer and the seller are both knowledgeable about the prices of goods and services in the market. That therein is a perfect market. So a perfect market is a market where buyers and sellers have general knowledge of the prices of goods in the market. To add to the determinants of the price level or the price factor of this market is basically the demand and supply. The demand and supply level or the demand and supply function is the only function that determines the level of prices that is to be given in the market. So in a market where both the buyers and sellers have a general knowledge of goods and services, that therein is a perfect market. While reverse is the case for the imperfect market. In the imperfect market, the buyers and the sellers don't have a general knowledge of the goods and services in the market. So I can easily say an imperfect market is a market where the buyers and sellers don't have a general knowledge of the level of prices in the market. So herein there is a discrimination of prices. A particular buyer can sell to a particular seller can sell to a particular buyer at a particular price. Then going to another customer, he can decide to sell the same commodity or the same product at another price. But in the perfect market, it's not like that. Every customer and every seller has a particular price that he or she sells in the market. But on the imperfect market, it's not the same. So I will also add something to say that sellers in this market, in the perfect market, are known as the price takers, while sellers in the imperfect market are known as price makers. So we'll be rounding up today on the introduction to what the market is all about. We will continue the topic in our next class.